Good morning, everybody. Welcome to another day of Market Report brought to you by Mike Bjork. Today is Thursday, June 4th. Hey, we just got a couple economic news releases scheduled for today, and we'll start off with the weekly jobless claims. So last week we had 284,000 people apply for unemployment. Forecast is supposed to dip a little bit to 278, and basically we came kind of in line with the projections at 276,000 people applying for unemployment. Remember, tomorrow is the big day. We have the Bureau of Labor Statistics job numbers, so we'll get the unemployment rate as well as the new job creations are being reported by them. Second on the docket is the productivity for the first quarter. So we had a reporting at negative 1.9%, and the forecast is at negative 3%, and it dipped basically in line at 3.1%. 3.1%. So again, mixed bag so far, and unit labor costs went up. So we had the initial reporting at 5%, forecast at 6.1, and it came in a little bit higher. So again, mixed bag of news here, where costs are going up on the labor side of things, and productivity is obviously down on the first quarter. Not a good sign right there. And weekly jobless claims went down, which is a good sign. So mixed bag of news there. Stock market's down quite a bit today. So far this morning, it's down about 176, but a lot of it is more based on the Greek concerns and comments made by the IMF. The Greek concerns is that they had the creditors and the Prime Minister from Greece meeting, and basically the talks kind of stalled. And remember, tomorrow is like the deadline for repayment on one of their installment payments. So hope their investors are a little jury as to if they're going to default on their payments. So that's a bit of a concern right now, that they couldn't come to reach that resolution as they had initially hoped earlier this week. Remember, also on Monday I mentioned that mentioned about the payment on Friday, that could be a big contributor to the volatility this week in the market. IMF, Christine Lagarde made comments that she thinks the U.S. should, or the Fed should, hold off on raising interest rates this year, hold off until 2016. She thinks that it would be too soon and it would hurt us more, where it might slow, especially with inflation lower. That she thinks we should wait until we're a little higher on inflation and jobs before we start raising rates, before those levels while they're still low. Otherwise, we might end up having to go backtrack and lower the rates again back to zero again if we do it too soon. Let's take a quick look here at the bond market. As you see, we've had a steep sell-off this past week here. It's been pretty horrific for bond markets. Today we got a little bit of a rebound today, so we hopefully that looks like the bottom where we hit, and we had a little bit of improvement today. So pricing got a little bit better compared to where we were yesterday for pricing on interest rates. All right, so at least that's a good side. We got a little slight improvement on our interest rates, even though we took a pretty big hit this week in terms of our pricing. All right, folks, have a great day. Thanks so much for watching, and we'll see you guys tomorrow when we get the big news for the Greek news, as well as the jobs numbers here in the U.S. Have a great day, and again, thanks for watching. Bye-bye.